When it comes to growing an account, most traders don't just struggle growing an account. They actually end up blowing them in a matter of weeks. And it's not because of the market, it's because of how they trade. One oversized loss, chasing the wrong setup, and just like that, the account is gone. You can start with $500, you can start with $1,000, you can start with $2,000. The thing is, you can still end up at zero if you're jumping from strategy to strategy. If you're treating your account like a lottery ticket, I know because I've seen this and watched this from people over and over and over. But here's the truth. Growing a small account is possible. It's possible when you have the right system. In this video, I'm going to break down the exact 5-step system so you can do it the right way. It doesn't matter if it's futures, it doesn't matter if it's Forex. It really doesn't matter because at the end of the day, these principles are timeless. The rules don't change, all right? Just remember that. The rules do not change. And if you follow this advice, you actually will give yourself a real chance to grow your account instead of having your account disappear into nothing. Oh, and by the way, you already know who it is, James Strong. And on this channel, we focus on turning market moves into money moves. We trade, we invest, and we focus on building wealth from the markets as a whole. So I'm gonna jump on my screen. Let me switch over real quick. All right, and we're gonna start breaking this down. So I really want you guys, I want to be sure you guys get this right. Step 1. First step is survival mode. The first step to all this, you want to be able to survive. A lot of people are doing things like they have small accounts and they don't necessarily fail because of the size of the account doesn't mean anything by itself. They fail because they're putting too much position sizing behind each trade. So the first rule is set a fixed dollar amount. Now, obviously when we say this varies, right? So the thing is, I trade futures, foreign exchange, CFDs, working on options now. I intraday, I swing. You can be very versatile in markets. Don't make people think you have to pick one. All right. I know this varies. The thing is, like when in Forex or CFDs with lots, you can get a lot more accurate because we can, put 1 point something lots. When it comes to futures, we're doing contracts, but still get it as close as possible. If you want to risk $100 a trade, all right, stop trying to trade the standards and go down to the minis or the micros, right? Go down and stop being on the big ES, go to MES. Get as close as possible, put one contract. But you have to know, obviously, and this is one thing I've had several people ask me, you have to know where you're getting in and where you're getting out. So that's how you have to determine how much you want to risk. All right. You need to know this because what you can do is you basically can prepare for the downside. It's inevitable you're going to lose in trading. That's the business we're in. We're going to lose. But the thing is, you can make sure that you can prepare the bottom. You know how much you're going to lose, right? Roughly, give or take. So again, with Forex, you can be pretty much to the T minus the spreads. When it comes to our futures trading, okay, cool. You got a contract, but get close to 100 as possible. If your position size where your entry and your stop loss is, maybe one contract based off that amount of points is $75 that day. Maybe the next day is 125. But what you want to do is end up averaging out over that amount you allot for. So if that's $100 per trade, have it there. And then you can prepare for the downside because now you know, okay, if you're averaging $100 a trade, you have, let's say, $1,500 in your account, it'll take you literally 10 trades to lose $1,000. That's how you should be looking at this. So first, you want to be in survival mode. All right. Next step, we want to have one. Let me make sure I write this for you guys. Step 2. She got it written on my other screen, so I'm gonna copy it over for you. Make it easy for me. Step 2, one strategy in your playbook, right? 1. All right, now this is the fastest way to grow without bouncing from strategy to strategy. This is the fastest way because, well, let me say this, excuse me, without. This is the fastest way to grow by not bouncing from strategy to strategy. You don't want to have 1 week you're coming up and you're trying to find, points where, okay, it bounced off for support. Then you're trying to look for areas of demand that may bounce up. The next one you're doing fibs and you're trying to catch retracements. Like, you don't want to be doing all of these things, okay? So we need to focus on one thing, one major thing that can help us, that we can hone in on, that we believe in. Like, yeah, you don't have to limit yourself, but focus. There's a big difference. Focus on one thing that you understand. All right. And the thing is, again, the way I trade, the way I teach people, the reason I can trade Forex, CFDs, futures, I mean, they're pretty much all the same thing. And then intradaying, swinging, I used to scalp when I first started, but that's not profitable long term, right? You really want to be holding positions for, a good amount of time, because obviously you got to think the big institutions and banks are not holding trades for 5 to 10 minutes. Yes, you can capitalize on market moves, but again, the spreads and commissions will eat that stuff up. You want to catch bigger moves, you have to start going up. So, I mean, it's as simple as that, all right? So that's number 3. One system you believe in. Number 2. One strategy, one system you believe in that's easily understandable. Now, step 3. I took my word step out. Step 3. We need to be building consistency. So how do we do this? All right. Before we start to size up, everybody wants to size up. Let's build some consistency. So now that we have a system that we believe in, it's tried and true, start small. We've already said too, fixed dollar amount. Start with that $100. If you need to build trust, start with $50. The first thing too, when you start trading real money, you should already have your data. You should already be back tested, and you should know statistically and historically how this system does. Start with your trade. Start with $100. A certain amount of time that, okay, I want to reach either this amount or this many wins consistently, or preferably, this is kind of going in depth, so I won't go too much in this video, but there's basically metrics you can track as well, as far as like your error in your accuracy, right? Based on what your system should have done and what you did. And maybe you have a passing score of 80 or 90%. If you don't mess up for 2-3 weeks straight, now you go up. You go from $100 to $250 or even $200. You don't have to double, because double comes with a lot of emotions. $250, $500, $1,000. Those are big jumps. But you can do $100, $200, $300, $400, however you need to do it. But have a system set in place. Now, number 4, step 4. We need to be journaling like a professional. This is important before and after you begin to trade live, because one, beforehand, you want to make sure you have accurate data, because a lot of times it can be skewed. We're humans, we're going to make error. I catch error sometime. I'll have back tested data, a sample size of anywhere from 80 to 100 plus trades. And I know some people are like, oh my God, that's a lot. That's the point. I want to be confident when I get in the market. I don't want to guess. That's one of the reasons a lot of people ask me how I get rid of emotions. Literally, it's the way I teach my people to get data. That's how I get rid of it. So if you want to go deeper in this, and if you want to learn more of what I do or how I do it, all my information is down below. Feel free to click the link. But this is one of the reasons I've gotten rid of a lot of emotional issues and things like that, is actually the data you collect. But yeah, if I have 80 to 120, I'm gonna have a few errors in there, but overall it's gonna be accurate, right? And then when I find it, I just correct it. So you want to make sure that we're journaling like a professional. This is not busy work. This is our edge. This right here. Let me put it on the screen. This is our edge. When we get data, this is what gives us our edge, our confidence, our ability to execute flawlessly, our ability to not get back into trades because we know where we're at, right? This right here, of course, we have to track everything. Track your entries, track your TP, track your stop loss, track the time of day, track everything you can track, man. And then review them, see what was different, see what was similar, see what was going on in certain days, certain times. And that feedback is what keeps you confidence, because it's not a bunch of randomness, all right? This right here is one of the fastest ways to grow and helps you refine your system. And then last but certainly not least, all right, step 5, we want to begin to scale, but we want to use these companies. And I don't even want to say props. I'm going to change this to eval. That's all they really are. We want to use evaluation companies to help us scale. Now, yes, Yes, they're advertising 100K, 200K accounts. Obviously, we know, they're not 100K and 200K accounts. But what they do give us and allow us is the ability to have that drawdown portion and give us that cushion that we need and that allotment to be able to risk, the ability to manage around 100K of buying power. So now instead of that $100 we had to risk, we can now risk $1,000 and still not have that much skin in the game. Yes, it comes with ups and downs. We have to pass. We have to have certain percentages. It does comes with pros and cons when it comes to your mental as well and the psychology to pass them. But this right here can be one of the best ways if done right. But let me I want to put this to this a big old but this is only after, right? You gotta remember, this is step 5. This is after we build confidence. So it's truly better to start with a personal account and just build confidence first. Paper trading account, but just build the consistency first before you start jumping into this, because this is why people start donating to the markets and all of a sudden they just start losing money and they're throwing money in the trash and they end up failing 30, 10, 15, 20 evals, have never gotten a payout or anything. And they're just doing like it's a hobby. We're not in this to have a hobby, man. Yes, we may enjoy this, but we want to make money for our family. All right. So if you're ready to move from learning to earning, all my information is down below. Feel free to click the link. Look at the things I have to offer. By all means, if it fits you, feel free to join. But yeah, man, I know you got value from this video. If you like making money, of course, make sure you subscribe to the channel. Again, this is what we do. We focus on making money from the markets. Remember, whether it's trading, whether it's investing, just the markets as a whole, we want to capitalize because these are trillion-dollar markets and money is moving and being made every single day. And of course, if you don't like making money and you don't like building wealth, then don't subscribe. It's that simple. Much love.